First thing we got to talk about today, and disclosure, I am not a Tesla shareholder, not a person out there talking about Tesla every day. It's an amazing, amazing company. I do not own shares. I would love to at some point in the future. Talk about a little bit about why I don't. But there's Tesla news. First news item of the day. We got to talk about it. Headline: Block, which is Square, Tesla, and Blockstream to mine Bitcoin with solar power in Texas, from CNBC. So essentially, Square and Blockstream are starting to build a solar and battery-powered Bitcoin mining operation in Texas that uses solar and storage technology from Tesla. Storage and solar is starting to become a bigger part of the picture for Tesla, and in the future, it will continue to be, as well as robotaxi, autonomous driving, and even the delayed Cybertruck, which now is apparently going on sale in 2023. Elon made the commitment at the opening party at the company's Giga Texas factory, which Elon does a lot of exciting announcements like that, and then there tend to be delays, so I wouldn't be surprised if that's the case again, but who knows. The original launch date was 2021, then it was delayed to 2022, and now it's delayed to 23. So who knows if we'll see more delays, but apparently the production delay was due to supply chain issues. Now the Cybertruck is going to be manufactured at the Texas Gigafactory, which expects it to become the highest volume car factory in America. I wouldn't be surprised if that happens. Tesla also plans to release the Tesla Semi-EV next year, and the production of Optimus humanoid robot will start in 2023. I don't believe that it's going to actually start in 2023. I don't think Elon is necessarily blatantly lying, but he likes to set these big, bold goals and strive for them as a company, even though a lot of times they don't meet them, because that is how innovation happens and how you push a company forward. And Tesla has been extremely successful doing it so far. The Cybertruck is initially expected to cost upwards of $39,000. And then, Tesla is still seeing production delays from COVID. So that's a very real thing. They had to suspend production at its Shanghai factory. Let's jump into why I currently don't own Tesla. If you've been following this channel and the update videos, I'm building this portfolio, and I've shared the companies that I own. But I've got a growth bucket, a dividend bucket, and a crypto bucket. And right now, I just feel that there's better opportunities for different growth companies than what Tesla currently offers. It's just my opinion. I haven't done enough work on Tesla, and I actually now want to do more with all these, different revenue streams coming online in the next 3, 5, 10 years. But we can see I've got CrowdStrike, GitLab, Snowflake, Monday, Twilio, DigitalOcean, Mercado Libre, ServiceNow, Upstart, The Trade Desk, HubSpot, Shopify, Amazon, Datadog, Adobe, Coinbase, Salesforce, and Zoom. And if we look at Tesla, this is using fast charts, and we look at them just on a price to sales basis, they're looking a little bit, overvalued compared to where the company has historically traded on a price to sales basis. Right now, they're at about a 19 price to sales ratio, and on average, they've been around 10.3 since back in 2009. If we shorten that, the normalized price to sales ratio gets this is back to 2018, gets up to about 13, but things have been a little crazy since then. So, we could see pre-COVID price to sales ratio was down in the 4s, the 2s, the 1s, and up to 3 or 4 at the high. Now we're talking about a price to sales ratio of 20 or close to 20. And so as excited as I am about what Tesla's doing and all the growth that they have ahead, if we think it's going to get back down to, in the 10s or under, then it's not as exciting of an opportunity as if things continue on the same trajectory, which, in my opinion, it will not maintain a price to sales ratio as high as it currently is forever. I don't know when they're gonna see that multiple compression down to a lower price to sales ratio, but at some point, in my opinion, as growth slows, that'll happen. And I could be completely wrong, and maybe growth is never gonna slow. But either way, it's a little bit too pricey for me now for the expected growth over the next couple years. And so analysts are expecting revenue per share to be up 58% in next year, 32% in the next year, and then 15% in the next year. And there's a chance those are low, but those are pretty generous estimates. So if we look out to 2024, based on what analysts are currently expecting, then we're only looking at a 4.5% annualized return. And I've just found what I believe are better opportunities than that at this price. If Tesla comes down and it gets down to, say, a price to sales ratio around 11 or 12, which would be, somewhere between $600 and $800 per share, I would be really interested in potentially opening a position in Tesla. And if we want to get an idea of how analysts have actually done in estimates for the company, just to say, hey, these expectations, are they likely to be too conservative? And so Tesla's likely going to beat them based off what they've done historically. We can look out 2 years. And so if we look at the 2-year forward estimate with a 20% margin for error, Tesla has missed it 10% of the time. They've hit it, so they've been about right 60% of the time, and they've beat it 30% of the time. For as exciting as Tesla is, analysts have been relatively accurate with estimates over the next 2 years. And so they could massively surprise, but if history is any guide, it's likely that the analysts are somewhere close on their estimates for Tesla. I don't see explosive growth over the next 2 years to where they're going to absolutely destroy some of these estimates. So I think that there's less chance I'm going to completely miss out on Tesla because it's just going to continue to skyrocket. Who knows what happens? I could be wrong. But we just have to work with probabilities as investors, right? And history. And so I'm comfortable not owning shares. As excited as I am about this company and what they're doing for the world, and Elon Musk, he's brilliant. I'm okay with not owning shares because of how they're valued right now. Even down to a price sales ratio of 10, with the company growing at 15%, the annualized rate of return is 2.6%. I can look at Lowe's, which is a company I bought, and I can look at a price to earnings ratio of 19 when they're expected to grow earnings per share by 13 and 11%. It's a very reasonable price to earnings ratio. And we're looking at a 23% annualized rate of return over the next 2 years. And so sometimes it's not about the most exciting company. It's about companies that they still have growth ahead. They have a history of excellent execution, which Tesla certainly does. But they're not currently, where are those expectations currently in the stock price and in the forward price? And so to me right now, Lowe's is a better opportunity for Tesla. Everybody unsubscribe from the channel right now. I know it's going to happen. But again, I'm not short Tesla. I would never short Tesla. I don't want to say never, but I'm not short Tesla and not planning to go short Tesla. I just feel like there's better opportunities with the limited money that I have. Hey, as always, thanks for watching the video. Tune out the noise. Take care of your mind, your body, and your money, and we'll see you back next time.